Hello, you are watching a series of interviews on the AIFC activities. Today, we are having a special guest, Dolly Ramaiya. Dolly is a founder of Truleum Studio and the founding partner of Truleum Venture Partners. Dolly, welcome to our studio.
Thank you so much, Nargis. Really appreciate you having me here. It's a pleasure to be.
We are happy to have you here.
Thank you so much.
And also, we are so glad to hear about the memorandum signed yesterday.
Yes.
And we are interested about the details of this memorandum, what benefits it brings to the involved parties. If you could elaborate on this, please.
Absolutely. So firstly, we are extremely excited that we reached an interesting milestone yesterday by signing the memorandum with the AIFC. Now, to give you a context of what it is that the memorandum involves. So the memorandum involves that we, which is Truleum Studio, and AIFC Tech Hub team are jointly going to launch the first venture studio, which will be launched in AIFC in collaboration of the two parties. We've also been lucky to involve few additional stakeholders whom we will be announcing shortly, who are pro-government involvements, who are helping our initiative and become additional stakeholders to this initiative. Now, a little more details about what a venture studio is. So as you must have known, I operate a small venture studio, which is based out of Dubai, DIFC. And studios are basically companies that build other startups and other companies. Now, we've had good success when we ran a few operations in UAE, and we want to be able to replicate something similar out of AIFC. AIFC is really interesting. Everything that is happening around Kazakhstan as a whole, it's a great place to nurturing new founders, new entrepreneurs, new ideas. It's a very ripe market. So we want to be able to come here and make the most of it. Now, the Venture Studio initiative will allow us to launch multiple programs over the next few months and years, under which we will not only support existing founders, we will build projects by ourselves from the studio and then invite more stakeholders to come and run it with us. Thereby, we are ensuring that there is a an active amount of innovation happening in multiple streams. So that is what we envision to do across the studio. The other interesting thing that we are hoping would happen is we are not limiting it to only one industry or one sector. We are keeping it generalistic and agnostic. So there will be a good amount of technology ventures and technology innovation happening, which could be financial technology or medical technology or healthcare technology. But at the same time, we understand that Astana is really aggressively looking to invest in creative fields or creative economy. So that's a stream that we're very involved in and we're very excited to be working on. So that will be the second part of the studio. And the third is more scientific. So when we talk about scientific, we're talking about innovations in the medical field, aeronautical field, into more engineering scientific aspects. So that's the third arm of it. But to summarize, the idea is that we will have launched the studio by around first quarter of next year, which will be agnostic from technology, scientific and creative fields. Which will be backed by Truleum Studio, the AIFC Tech Hub team, and few additional stakeholders that we are looking to onboard.
Yeah, thank you very much for such a detailed explanation. It's great to hear that such a three core parts of this memorandum, and we are excited what is the future holding on this. So whilst learning about your biography, we found out that you are such an experienced expert, and with your 17 years of experience in the fintech industry within the GCC region, how have you seen the fintech landscape evolve? And what do you believe were the key factors driving this fintech revolution?
Very exciting question, firstly. And I feel happy and blessed to have seen that shift from what it was. So just a quick background, the last 17 years, I've primarily worked in two markets. In GCC, the first 10 years were in the Sultanate of Oman, and the last 7-8 years out of Dubai, UAE. And I became involved in this industry from a background of cards and payments. So my initial work started, I think, back in 2008 with American Express, which is a well-known, a prepaid and a payments card program globally. And that got me connected to what was cards and payments industry, and I continued working with it. And what I saw in 2015, 2016 onwards is this gradual shift of digitalizing payments, and subsequently digitalizing all the individual facets of traditional banking. So as you know, traditional banking runs on 3 or 4 principles. There is payments, there is credit and lending, there is investments, there's insurance. Now, this has been the backbone of banking since hundreds of years, right? Now, Fintech Revolution, that we love to call it, is primarily the first objective was to make use of all the advancement that was happening from a technology standpoint or a digitalization standpoint, thereby making these services more available to the end users. So if you will take probably 10 or 15 years back, if you wanted to open a bank account, you'll have to line up to the branch, sign a couple of lengthy forms, and then keep going back and forth until you probably will get. Now, if you cut to today, it probably will take you to download one app and literally 30 seconds, and you can and this is what the digitalization of banking, which was supported by the Fintech Revolution, that has happened. And this is just very early part of it. There are so many traditional streams of banking where there is a lot of scope for innovation. So we're talking about insurance, we're talking about investments. So investment also, when we speak about wealth management and traditional investment, used to be a very exclusive club, right? It's only for a few people and a handful. But we're trying to enter an era where this is now applicable for everyone. As long as somebody has a digital device in their hand, they should be able to access all the traditional facets of financial industry. And me being part of this ecosystem from a small part, seeing cards and payment and subsequently seeing how the narrative changed is very exciting, because we get to experience it from both sides of the nation. We know what worked during those things, and more importantly, what didn't work. How is the consumer sentiment around this? Because consumers we're naturally born towards doubting new technology. It's inborn in us, right? So how to change that narrative, how to bring trust into a new system has been one of the most exciting thing, I think, for anyone who works in fintech stream to experience and to be part of. So that's in a nutshell for the fintech industry for you.
Yeah, so you've witnessed this revolution within the system,
Correct.
Because we are as mostly users, we've noticed, we observed, but we are mostly observer. But what was happening within it, it's so exciting to hear about it.
Absolutely.
And also, as the founder of Truleum Studio and the Truleum Venture Partners, what lessons have you learned from your experience with the launch and the growth of YAP, the UAE's first independent digital banking platform?
So a lot. I feel blessed to be called a founding team of YAP, which managed to launch the first neobanking platform in UAE at a time where regulations were not very strong. So when YAP was being conceptualized by its 2 great founders, they're good friends also, and I and a group of other people were called upon to become, the early founding members of this. So the experience was really interesting because we were working in a completely new territory. We didn't know how to launch a digital bank without the right licenses, without the right banking support. And having navigated that, so I used to oversee the regulatory structuring, the partnerships for YAP. So expanding into multiple markets, ensuring that we had the right licensees, the right regulatory bodies involvement, the right partner banks involvement, how to ensure the roles and responsibility when you're working with large corporates like banks and regulators. It can turn out to be quite sensitive. So managing all that. So a lot of what I embed when I build Truleum has been thanks to my learnings and understanding of testing those out while I was, a founding member of YAP. So that has been, a godsend experience for myself personally. Another thing also is it gave me a very good feeling about exploring completely unknown concepts in completely new markets who've not tested it around, because it's a huge risk, right? You don't know how consumers will adopt to it, how your ecosystem is going to adopt to it. So working and driving that education, because a lot of what you do during that time is also very educative. You're trying to educate your consumers to test something out new and build that trust, but you're trying to do the same with very experienced large corporates also, because they are used to doing it in a certain way. And when you go and tell them, hey, you've done it this way, it has worked for 20 years, let us change it slightly and let's try it out. That turns out to be much more challenging, because corporates, by the very nature of it, are not very flexible because they're too large to be flexible. So building that narrative slowly and steadily, being part of the ecosystem as part of YAP and changing that narrative slowly has been one of the most, fulfilling experience for myself. And thanks to that, most of that learnings I now apply to while building Truleum Studio.
So in a way, like educating other parties was the main thing in managing change resistance towards this technology innovation.
Absolutely. Any change, like we say, right, change is the most difficult thing to do, but at the same time, the most rewarding thing. So we go in with kind of a most optimistic view of, and then it's good to be part of a narrative when you are showing everyone the brighter picture that by changing a few principles, a few operating models, this is how you can actually change the world. Because if you don't do that, then we will be, left behind one way or the other.
Yeah.
The world is changing. So the best thing is to proactively be a party to it or become an observer to it.
Yeah, I do agree with you, because even neurologically, doctors would say that our brains are not so flexible for changes.
Absolutely.
And also the venture studio model is becoming increasingly popular in the startup ecosystem.
It is.
What do you see as the distinct benefits of this model, and how do you approach building a strong team and organizational structure to ensure the success of your ventures?
So studios have, a quick background about venture studios. So venture industry in general has been there for many years, right? So it started by traditional private equity members now understanding this, investing in early stage. Hence, venture capitalists were born, or early stage venture capitalists were born. And in the last 20 to 25 years, we've seen a lot of accelerator models and incubator models working. But after all of this advancement of methodologies being applied, what was seen in the last few years is there's something still, missing in that narrative, because we were still seeing a lot of failures. If you provide so much support to startup, if it doesn't work, there must be something missing to it. How do we make this better? And hence a studio model was born out of finding all of these gaps. That venture capitalists come in and they have a very personal agenda because they want to invest and be able to get money. That's the role of a venture capitalist. Accelerator are a good, a good party, but they work on a very time-based, cohort-based model. They'll support you for 3 months, which is great. If you are a first-time founder, if you're a young founder, then the principles on which the accelerator program takes you through are great for those. But if you're a very experienced second-time entrepreneur, maybe you might not benefit so much from an accelerator program. Incubators are pretty much the same. They are very time-bound. They are more giving you the ecosystem landscape overview. Now, studios, in a very simple nutshell, play the role of a co-founder. It's an institutional co-founder. So if, Narkis, you were to build a company tomorrow, you have a vision to build whatever it is that your heart desires. The first thing ideally you would want to see is maybe I should bring myself, get a co-founder who will become my partner in crime, and then we'll build this. Now, you may or may not find some person to work with because there needs to be a lot of alignment. If you find, that's great, but maybe you're restricted. You might be a technology person or a creative person, but that doesn't mean just because you know one skill set, you can build a large company on it, because you need too many different skill sets. So studios are basically built to take care of that gap. They become the second or third co-founder with you, where they support you in a way by actually getting operationally involved in you building your business. So it's not just somebody writing you a check that, Narkis, I'm investing in you, and inform me on a monthly basis how you're doing. But this is more, we're working, tell us what we can do for you. If you want us to take care of your product building, if you want us to take care of your technology, your financial, of course, all your operational, administrative, we actually take care of it. So you can focus on your main skill. So this is the biggest benefit a founder can get out of the studio model, and something on which the principle of a venture studio is built. So, and exactly the same that we're now trying to apply here in AIFC. So that's how the studio model is gaining traction. To also add to it, there again, studio is an operating model. And by the very instance, no two operating model can be exactly the same. There will always be slight difference in narratives. So what we are seeing is good operating models in venture studio and not good operating models, right? There will always be a mix of. So studios also are seen in probably a negative light by some venture capitalists, because they think that venture studios will come in and they might not really play a very active role. So it all comes down to how well you create a model. And this brings me to the second part of your question. How do we do that? And the biggest part is creating a very equivocal, proper structure of talent and governance on that. So talent is where you create your core team, right? So if your studio is focused on building only technology companies, or maybe only or creative companies, or whatever you create your core structure to support that narrative. So if even in technology, if you're going to build only fintech projects, but if our core team doesn't understand fintech, then it's not going to support them, right? So you need to build your core, which is completely in sync with the industry or the sector that you're focused on. Now, going back to what I mentioned about the MOU we signed with the AIFC, on this, we are daring to make it more agnostic and generalistic, because we have multiple stakeholders involved, and we are quite confident that we can cater to multiple sectors and industry. But ideally, studios are built with a narrative to be very sector and industry specific, because you can support that sector unconditionally, because you come with that background, come with that understanding. You've created your key layer of talent based on that. You've created your key governance layer based on that industry. So that's how we ensure the success of any studio.
So the studio is not the place where company owners or startups can find investment, but also support,
Exactly.
Full support.
Absolutely.
Yeah. And it's like from the viewpoint of startups, but from the viewpoint of investors, what are they gaining, and what is the benefit of studio model for investors?
So for investors, that's a very valid point. Investors, in a very simple language, are de-risking their investment. Now, what I mean by that is, let's say today, if an investor is investing, you are an investor who likes to invest in early stage startups. If I come and pitch you my project, Narkis, this is what I'm doing, you may or may not understand that industry. You might be an investor. So you have limitations of ensuring how I become a success. You can support me, you can, invest in me, but that will not guarantee you that I succeed, right? Now, studio model by no means is a guarantee of anything. But we have already ensured, we've taken a very stage-gated approach, that we have ensured proper validation. We have built the product only after checking with everything. We're not just going blindly and building something and hoping that it works. We are taking a very methodical approach to ensure that whatever it is that we are building becomes a success, or has a chance to become a success. So it is a stage-gated approach, and by applying a stage-gated approach, an investor gets more validated concepts to invest in. So instead of investing in a concept they not understand and hoping that, hey, maybe I like Narkis, she's good as a founder, and probably if I invest in her, she'll become she might build a good company, which is great. I mean, that's how it works. But then there is a risk, right? So we try to de-risk those concepts under a studio model. So that's one of the biggest benefit an investor can get, that they are getting more risk, I guess slightly risk-averse concepts which have already been tested, which have been validated, and only then built. So that is one of the biggest advantages, yes.
And what is the main thing that makes this de-risking concept more attractive? The main, if you could name one particular thing.
So it's mainly, in a nutshell, it is the stage-gated approach. So I'll probably, get a little deeper into a stage-gated approach. So when you're building a venture, right, there are multiple stages, multiple milestones that it needs to happen. You will start with an idea. Before you start with an idea, you will have to understand the problem, right? That I'm going to create a solution for this problem, or whatever it is. It is or at least only a local problem. Is it a problem I think, or is it a problem that everybody thinks?
Yeah.
Because we can always think, hey, my idea is the most awesome idea out there.
Yeah, of course.
But there needs to be a lot of validation that happens, that it is not just you thinking it is, it's a good problem to solve and everybody has the same problem, but actually to go and validate the idea. So this is one of the biggest milestone, ideally. Today, what happens is founders have enough conviction in their ideas, which is good to have, but it's not validated. They will, go and build the project and then later on test it out, and consumers don't want to use it because, they don't have a need for it. So that is one of the common reasons that after putting all the effort, all the money and all the time, consumers are not wanting it. So we try to take each small concept, each small milestone, and ensure a lot of validation. That this is a problem. Before we build it, let's check if people will use it, if stakeholders will want to get involved, if others will want to invest. So that is there. And now this is just the problem and ideation phase. We take each of these phases, which are a standard, life cycle of a venture, and ensure that we provide proper validation and, approach and gated approach on each of this. Because what will happen, you will bring to certain stages. And if we know that it's not going to work, the best thing a venture studio can do is just park it. That, hey, we like it, but we didn't get the right validation. So let's park it. It's not worth building it because you will invest time, effort, money, and you will launch it, but nobody's going to use it. If you didn't get the right feedback from the consumers now, or from the ecosystem, or from the stakeholders now, let's not build it. So sometimes the studios play a very reverse role where we want to ensure to kill as many ideas. So we only build what we are completely confident and we've validated very well. So sometimes it's about killing ideas sooner rather than as a founder, because founders are very emotionally involved.
Of course.
You will not want to kill it. Even if you'll say, you probably will wait 3 years for everyone to say, okay, it's not going to work and you need to close it. But sometimes you don't need to wait 3 years if you can get that.
Yeah.
So that is sometimes a reverse approach of a studio, is killing ideas sooner and only building what has working well.
Yeah, in my opinion, it's better to kill an idea sooner rather than later. Lose some budget, energy, resources.
Absolutely. And this is more aligned, again, in sync with investors. Because investors are not waiting for 2-3 years that, okay, I invested the money, there's no way for them to gain their investment back. But here, at least there is a slightly better chance because we've taken the approach in a very methodical way.
Yeah, I see. Could you give me maybe some of the successful examples of within the Truleum Studio, the startup that you supported where within this process where investors and the idea owners, both sides gained some success?
Sure. So I'll give you two narratives, and probably that will answer your question. So one was an idea which was brought to us by a founder who was working in a very interesting payment tokenization space for many years now. And he wanted to build a newer startup for a while. He started on it. But he comes from a technology background and a more supply chain background, logistical and merchandise background. And he wanted to partner with us to use our expertise into traditional payments and more regulated payments, because we've come with a good understanding of how the payment tokenization ecosystem works, how the regulatory landscape works. So we partnered with them, and we were able to become a good partner to take care of all of these complexities, you could say, so that the founder could purely focus on taking his product to more consumers. So that was one of the biggest benefits. We've been working with it's a very interesting project. It's called MODA, which works on wearables. So basically, you can take any wearable device. You want a bracelet tomorrow, and you can actually use this as a payment device.
Oh,
Just
great.
technology. And you can actually even do, so if you want to put a small NFC chip in your glasses and pay with your glasses at the QR, you can actually do that.
Actually, yeah, in my case, it's a valid point.
So the concept was very interesting, that any wearable can become a payable device, because we have seen that, right, with smartwatches and smartphones. You today use your smartphone for most of the payment, or probably smartwatches. And we said those are very brand agnostic. You will either use an Apple or a Samsung or one of those brands. But we said, let's become brand agnostic, and any wearable, any brand can be then turned into a payment device. So it was a very interesting concept where founder found the benefit of partnering with us. We came on board as an institutional co-founder, where we take care of all these things from a strategic standpoint, from a partnership standpoint. Then it's always, because the founder was an individual founder or solo founder, there's always a soft skill connection that it also, we become their support, right? So it's not just about giving them more hands-on, but hands-off approach as well. Sometimes founders are just confused about a certain strategy, and they need to discuss it more casually. And they like that they have a co-founder with them. So we're happy to be supporting. The other narrative is where we ourselves build few concepts without onboarding the founder. So we worked on a problem statement approach. So we've been in UA, it was UA specific. We know what is working. But we also did a lot of assessment of what is not working or what is not available. There are still some gaps in the ecosystem where nobody is creating solutions for that. How do we cater to that? What kind of technology products or payment products we can make? So we built two similar projects which were catering to the financial service industry to offer micro lending services or payroll lending services to that specific group and create a product out of there. And once we felt there was enough validation and we felt that, yes, this actually has the potential to succeed, that's when we onboarded a founder. Then, hey, we know you have this kind of skill set. You would be the great co-partner to come and build this with us. We've already received some kind of milestone. We've had some validation. We have some feedback on this, so that the person who's coming on board, the founder, was able to purely take this. It's already half baked and just focus on, scaling this and growing this.
Yeah.
Now, in both the narrative, the investors are always benefiting because they're getting concepts which have gone through that approach. They've gone through a lot of product market fit validations and all the other stage-gated validations that we have applied. So that's where it gives them additional support. That and I guess more of a, to put it lightly, a little bit of relief that yes, this is actually going on track and we can expect good returns from this.
Yeah.
So these are just some high-level examples of what we've done.
Actually, those are amazing examples. Thank you very much for sharing with us.
Thank you.
And thank you very much for being here.